Hello again, thanks for joining me. I had a few spare moments, so I thought I would put together a short video. I didn't have anything prepared, and I've quite enjoyed the last two weekly chart reviews. Firstly on the ASX sectors, and the second one on the overseas futures charts, because it allows me to cover a whole range of different principles all in the one video, rather than just concentrate on a single principle. So let's have a look through this week's weekly charts. The first one's the S&P ASX 200, the XJO. Now the important level is here. This is the breakdown line where price broke down from previously, and now the market's attempting to recover back above the breakdown line. There's always going to be some resistance surrounding that line where people got locked into a poor position up here. Remember, this index represents the stocks that comprise the index. So this week price has pushed down through the range of the previous bar and then popped up and closed almost level. Now it's poised to push higher here. That's what the expectation is, and that would be a successful recovery back above the breakdown line. If, however, instead the market was to fail here and push lower, if the market moved below these lows here, this would be a change in behaviour. This would be a real failure, a significant failure in the market. So we're at a pretty important juncture now. The market can accelerate higher. We've effectively tested last week, tested for supply, and we're positioned well to accelerate higher, and that's the expectation. If it's unable to do that and price fails, this is the level we're looking at here as the important level. So we'll see what happens next week. Now the mid caps are very similar to the XJO, except for the fact that they're acting a little stronger. The XJO is trading a little lower, where the mid caps are right up at this level here. And the small ordinaries are somewhere in between both. They're a little stronger than the XJO, a little weaker than the mid caps. But the next interesting chart, at least interesting for me, is the financials. This is Australia's biggest sector by quite a margin. And the last 2 weeks have effectively seen a shakeout and a test. And a shakeout and a test, or a test and a shakeout, often equals a breakout. Now we have to wait and see, obviously, see what the response is. But you've had a shakeout and down here on quite high volume, then a test for supply and found much lower volume. Selling pressure was not strong, and that leaves the market well placed to push higher if trading conditions are favourable. So here's your breakout line, and you've got a shakeout and a test, and the expectation is for price to push higher in response. This will be a significant breakout if it does happen, because this is Australia's largest sector and will give a real tailwind to a push above the breakdown line on the XJO that we were just talking about. This is the miners. The miners are seeing reducing volumes at the moment as price pulled back. You can see down here volumes reduced through here, and that allowed price to push back up. This is only a minor level. This is a more important level up here. We'll see if price can come up to this level next week. This is the gold market, ASX gold. There was significant buying in this bar down here. We pointed it out at the time, and this was the response to that buying. A nice push up like this. Then there was a consolidation, which is exactly what you want to see. And now price has accelerated higher again and broken out above this minor level. I thought there would be some reasonable resistance at this level. So far that's not really been the case. There was a little bit of a close off the weekly highs here, but it wasn't substantial. There's a lot of volume in here. This is a lot of activity and a lot of demand. That's absorbed a lot of the supply that may have been trapped in here, and I anticipate the rest of what may have been trapped actually sold out for a loss through here. This level here is the next level. I expect there to be some resistance, but this is the important level here. If price pushes above this level on this index chart, 7,500, that would be significant. That would be a true breakout. So that's the level to watch. Energy is pretty interesting at the moment. You can see the market has been attempting to go higher every week and then is faded lower each time. There's no significant price breakdown every week. For me, this is the market being pushed around deliberately for whatever reason, perhaps some sort of accumulation. You can see there is demand in the market and then it's pushed lower each time for a weaker close. But look at the volumes, they're reducing every week. Selling pressure is low, or it's reducing at least. This is an engineered pullback, I think. We'll have to wait and see. If price was to continue lower and break down, well, I'd be completely wrong. But at the moment, this looks like an engineered pullback to me. Let's wait and see what happens. Healthcare was a bit weak this week. It did close within the range of the previous bar, but unless there's a response higher next week of some description, price is threatening to come back and test these October lows down here for strength. So we'll see. Wasn't a very good bar, a bit disappointing really. The industrials attempted to push higher from the open last week, eventually got pulled back and closed a little off those lows in the end. Volume was quite high, so some supply was obviously drawn out. Price is trying to break above the recent highs. We'll just see how it goes next week. It's a questionable bar. It's not really giving any indication on which direction it's going to travel in the short term. This is a significant chart. This is the US dollar index. Considering a lot of commodities are priced in US dollars, this is a chart you should always be watching. This level here that I coloured in the orangey yellowy colour is a significant level, a significant zone of support and resistance, and this week price pushed above it, and you can see that it was on average volume. It wasn't excessive, so the chances of a reversal are reduced. If this was really high volume, I'd be a bit suspicious, but it was on average volume, which suggests that there wasn't very much selling pressure in the market, and price was able to accelerate higher on just general day-to-day demand. This is what you want to see on a breakout. You don't want to see excessive volume. It can be increased, but not excessive, at least until it's confirmed. This was a significant push above all the recent highs here and above this long-term support resistance zone. There may be a test for strength before price tries to accelerate away, or momentum could be so strong that it just continues higher. We'll have to wait and see. I tend to feel as though there will be some sort of test for supply, even if it's only for a day or so before price pushes higher again. So some sort of pullback and then an acceleration away if selling pressure is weak. which I expect it will be looking at that chart. That's a significant move this week, one everyone should be paying attention to. There's not much supply in this market. This is the S&P 500 futures. Volume's been below average for the last 5 weeks. There's very little selling pressure in the market. This week was a test for supply. It didn't draw out any great selling pressure. I expect the market will try to push higher in response next week. US Treasuries looking vulnerable. There was some cause for celebration when there was an attempt to recover back above this important level the week before last, but price has pushed lower again this week. It did remain above the previous bar's low, which is a minor positive, but the market looks vulnerable. It may break down further. We'll have to wait and see. Copper saw significant buying support come in here. Now, I mentioned it the week before last. Price came back here, and look how much volume there was. And then the very next week, volume was actually slightly increased, very slightly, but spread narrowed and closed in the middle. It lost almost no ground at all and closed within the range of the previous bar. The only way that can happen is if buying came in. If that was all selling pressure, you would expect another down bar with a similar range as that. So it would have looked more like this. But it didn't. Instead, spread narrowed considerably and the close was in the middle. And then now the next bar's up. This was buying support come in. Now I expect price to at least test this level next week, and we'll see how it deals with that, especially if the US dollar is rising as well, because that's producing a headwind for this market. But we'll just see how it copes with it. There was an up bar this week and the US dollar accelerated higher. So it absorbed the strength of the US dollar and still closed higher. That's a significant strength in this market. Gold did a similar thing. Gold accelerated higher this week despite the strength in the US dollar, which was providing a headwind. The fact that price was able to push above all these previous highs for many, many weeks and close up at this significant level is really important. Now there may be some testing for supply in response, and if supply is found to be low, then there'll be a good chance price will attempt to accelerate away and break out above this level, which is really important. This is an important level, similar in importance to that level that I showed highlighted in the orangey yellow colour on the US dollar index chart. This is a significant level. If price is able to negotiate a way through that resistance and push higher, it'll be a serious and significant price move. Now it may do something like that. That's probably the most likely way the market will travel, but we'll see in the coming weeks. Silver is lagging quite a way behind gold. The gold market is at about this level here. You can see that silver's quite a way behind. Gold's already through this level and it's coming up towards this level. It's still travelling okay, it's just acting a little weaker at the moment. This is light crude. You can see that light crude is consolidating. There's been significant gains recently, and you can always gain an insight into how strong or weak a market is on how far it pulls back during the consolidation period. If the market pulls back a significant margin, it's always a little weaker than a shallow pullback. And so far the market's hardly pulled back at all. It's only come back this far. My general measurement is the 50% level. If the market pulls back less than 50%, then it's strong. And if it has to pull back deeper than 50%, it's a little weaker, despite the fact that it's made significant gains. This market so far has hardly pulled back at all. So the depth and duration of a pullback in response to significant gains is always important. It gives a good indication on the sentiment in the market. And in this case, the market's looking strong. The other factor to take note of is the duration of the period of consolidation, how long it takes to consolidate. If it takes a really long time to absorb the supply that's drawn out when a market makes significant gains, then it's a little weaker than if it's able to absorb the supply quickly and then push away very quickly. So a short and shallow consolidation period is much stronger than a deeper and long-lived period of consolidation before it can push higher again. So this market is looking really strong at the moment, and if it's able to accelerate away in the next week or two, then it will be a fairly short consolidation period and a very shallow, if it remains at this level or higher, a very shallow consolidation period, and that suggests this market is strong. The Aussie dollar was trading the inverse of the US dollar pretty much this week. There has been some resilience being shown in this market for a little while, and there's quite a bit of previous support being shown between these two levels here. So you can see that when the market has dipped below that level previously, support has come in pretty quickly, and it's heading towards that level now. That level is roughly 72.5. So let's see what happens. It looks like it's going to test that level again. We'll see what happens if price gets there. The last market is Bitcoin futures. Bitcoin futures have been negotiating a path above the previous highs. There was a gap at the previous highs here, and that always means there'll be some trap supply there. Prices pushed above the most recent high here this week. You can see there was a little gap off last week's close, a little gap almost up to this high that I marked. Prices pushed up, and it's come back, and volume was fairly low, which means selling pressure was likely fairly low. So I would expect a response, something like that, perhaps next week. But the pullback may be deeper. This is a significant level, so price may actually come all the way back and test this level for strength, particularly if increased supply is drawn out. So you might see price come back like this, and then go through a little period of consolidation, and then if supply is low, price will attempt to accelerate out again. Okay, that's all of the charts this week. I quite enjoy going through the charts like this, where I can show different principles and ones that are current at the moment. So hope that was worthwhile. Let me know in the comments if you like this sort of review when I'm able to do it. Thanks for your time again. See ya.